Want to unlock big profits in real estate? You need to understand after repair value, or ARV. ARV is your secret weapon for finding, funding, and flipping properties for maximum returns. It's the magic number that tells you how much a property is worth after you fix it up. Think of it as your crystal ball for predicting a property's future earning potential. Mastering ARV is essential for making smart investment decisions and, honestly, for maximizing your profits. After repair value, or ARV, is simply the estimated market value of a property after it's been renovated. Imagine you find a rundown house. It needs a new kitchen, updated bathrooms, and, some fresh paint. The ARV is what that house could sell for once those renovations are complete. It's really all about seeing the potential beneath the surface and understanding the value you can create through renovations. ARV is especially important for multifamily properties like duplexes or apartment buildings. Why? Because renovations can significantly boost rental income. A modern kitchen and updated amenities can attract higher-paying tenants. This means more cash flow for you. By accurately calculating ARV, you can determine the profitability of your investment and secure the financing you need. ARV is your multi-purpose tool in real estate investing. You can use it to evaluate potential deals, determine if the purchase price and renovation costs make sense, and even secure loans from lenders who rely heavily on ARV. It also helps you negotiate a fair purchase price with sellers, plan your renovations and budget effectively, and, most importantly, estimate your potential profit margin. Let's say you find a duplex needing renovations. Comparable renovated duplexes in the area sell for $300,000. You estimate the renovations will cost $50,000. Here's how to calculate the ARV. ARV equals the market value of comparable properties plus the value added by renovations. So ARV equals $300,000 plus $50,000, which means ARV is $350,000. This means the duplex, after renovations, could be worth $350,000. Estimating ARV accurately is crucial. Start with thorough market research. Analyze recent sales of similar renovated properties in the area. Get accurate repair estimates from contractors. Factor in current market trends. Are property values rising or falling? Consider the specific features and location of the property. Is it in a desirable neighborhood? Does it have unique features that add value? Understanding ARV is like having a roadmap to real estate success. It empowers you to make informed decisions, secure financing, and maximize your profits. By mastering the art of ARV estimation, you'll be well on your way to building a successful real estate portfolio. So, embrace the power of ARV and watch your real estate investments soar.